under management.
What does AUM stand for?
What is it?
Assets under management. AUM.
AUM?
Yeah.
Oh, yeah.
Cool, man. So, trying a little bit of something new today. We got the audio and the visual here. So today is March 27th, and already today we've submitted 2 offers on a 9-unit in Tampa. We've been doing a little bit of prospecting this morning. I think you already knocked out like 30-something calls. And
got 2 leads from that. Look pretty interesting.
Nice. Okay, cool. So welcome to another episode of Multifamily Mondays, Monday Moguls. And wanted to actually talk about multiple topics today, not just a couple. But one of the things that we've been talking about and realigning our focuses with in this business is really understanding your customer profile, because yes, there's always properties, and yes, our job as transactions brokers is to see a transaction through and through. But at the end of the day, you really got to put yourself in the shoes of the people that you serve and really kind of see what problems do they have, through their lens that they need solved. It's not just a simple, okay, you need this property, transaction done, like that's it. No, it's way more personal, relationship driven than anything. So talking about sellers, because right now we're making a lot of calls for sellers in this market, and you kind of gotta choose your battles, because when you're looking at a property and the person had just bought it in the last 3 years and they're like 39 years old, are they likely to sell that property? Well, how much equity do they have in it? Probably not nearly as much as somebody that would have owned it for 10, 15 plus years, right? So that's one qualifier. How long have they owned it? How much equity do they have in the property? The other thing that we're going to look for is where are they at in their life? Are they getting close to retirement age? Because that's going to be a big factor as well. Are they done handling the operations and the management of things? That's going to mess this whole thing up now. Hold on. We're going to take a pause real quick.
Business call.
Yeah. All right. Okay, now we're back. So now we're looking at, how long have they owned it, the amount of equity that they have in the property, where are they at in their own personal lives? Do they have enough equity to hold them aside for retirement? Are they going to be handing the property over to someone, or are they looking to get out of it and have a big lump sum of money instead of having to deal with tenants, termites, and toilets that often come with the operations management? And even if you have a property management in place, you still have to manage the property manager. So that's one thing. Like my dad, for instance, when he had a rental property, it was 45 minutes, 50 minutes away from the house that he lives in now. And the tenant there was a handful. She would go over to the neighbor's house and turn off all of their lights because it was too bright. And, it was 1.5 acres, 2 acres. And, there was really no lights out there to begin with, so it was just kind of irrational. But, it was a long drive for him. On top of that, the rent that was being brought in was covering the mortgage, and some of the utilities and that type of thing, but it wasn't covering it to the fullest extent. And my dad, not being full-time an accountant, it's not really, not a full-time real estate guy, wasn't really his full-time focus. So, in that case, if you're only making $100, $200 a month, is it really worth it to go out there and do all that? So, is their primary profession real estate? Yes, no. Do they have anyone that they're going to pass the property along to? Are they near retirement? How much equity? How long have they held the property for? So those are all things that we look for in customer profile, and how we might be able to be of service to them, and help get them top dollar for the property if they want to list it, or we can just directly place the buyer and not have to worry about going on market as well. So multi-versatile, able to speak to their needs in a couple of different ways. So that's one thing. The other thing is Contractor Quotes. This quadplex that we had purchased in Winter Haven, I'm out there getting different quotes right now, and one of the things that I'm looking at was, okay, I want to do this project, and this project, getting quotes for each. Rather than doing that, I think it would just be easier to go with a general contractor and do the whole thing together on one drawn out work schedule. Instead of doing all these individual things, you can take back a little bit of margin on each of those. You just got to make sure you're not shelling out all the money for materials up front. And you always want to get, at least 3 quotes on some of these deals that you're doing, and always go for referrals from property management companies, agents, other local people in the area, which will also bring me to how have I gone about creating a list of over 400 contractors in the greater Tampa Bay area for all different kinds of work. I mean, if you want to build a pier, if you want to install garage doors, if you want to build a fence, if you want general contractors, if you want a pool guy, if you want anything, they're on that list. And those are all people that I have actually seen out in the field doing work. As I'm going through, driving some of these neighborhoods, driving properties, doing showings, I'll go out and I'll pull my phone out real quick and I'll take a picture of these trucks. And then about one time a month, I'll go and I'll enter all that information in an Excel spreadsheet. And then if anybody ever needs anything, I can just send them 4, 5, 6, 7 contractors. And that's a resource that not a ton of people have. And those are real contractors doing real work, and they're not always the most tech savvy guys that are first page of Google. So those are some good things to have in mind for building out your contractor list, your preferred vendors list, and being a good resource to a lot of your clients. So yeah, you were kind of talking about kind of shifting over now to prospecting. So you've been making a lot of calls on the prospecting side of things. We have a virtual assistant that we work with, and you've done a lot of the data entry, and now we're getting to the point where we're servicing these leads. So you kind of want to take it from there, and what your experience has been, what's been working for you, what hasn't been, and any advice.
Yeah, prospecting, I feel like that's what I do for the majority of the time. I try to tackle it in the beginning of the day because I would say people are more responsive towards the beginning because they're getting their day started, and I feel like most people really don't want to deal with people calling them about their properties towards the end of the day. It's more of that's more time to kind of wind down. But I had a few questions about prospecting. Where so say you're on a good roll, you're calling around, you're making your 50 calls a day, and you get a few good leads in your pipeline. But I've been reading a few books, and I've been kind of hearing a little bit of both, where some people should say you should take a little bit of time off of prospecting and put more focus on those leads and just kind of finding buyers for them. And then while other books are kind of saying no matter what you should do, or how much time you spend on the day, on those leads, you should still always have a certain amount of time just always prospecting new clients. So like you said earlier, so your pipeline doesn't really dry up. So I just wanted to actually ask you that, how would you go about that?
Well, like anything, it's kind of a muscle, right? Mm-hmm. So if you go to the gym and you hit legs every single day for a month, you're probably going to be pretty solid. And then if you go a month and a half without doing legs again, that muscle is going to atrophy. So you gotta keep it constant, even if it's just enough to maintain. So if you're cranking out 50 calls a day, 3 days for 2-3 weeks at a time, and then now you've built up so much business that you're able to service the buyers and sellers. And so then that becomes the focus, and then you take the attention off of that without touching it for 2-3 weeks at a time. Once you come back into it, you're going to be a little bit rusty. It's going to take some time to get back in the swing of things. And what a lot of people in this real estate business do is they do a lot of the prospecting. they start gaining some momentum, and then the best leads that they get, they focus all their time and attention on that to get it to the closing line, to keep moving it through the pipeline. And then once they get it to closing, they're like, they can breathe. But and now they're like, now what? You're almost like a free agent again. You're like, all right, you got to go put myself to work. So, that's kind of what happens, and what I've seen a lot in the prospecting things. So you always want to be making at least 10 cold calls a day in your business to keep the pipeline moving along, and ultimately, like we were saying before, this is a relationship business. The more contacts that you have, the more relationships that you have, the better able you are to service different properties, different buyers, things that you just come in contact with, and you can connect the dots. Because a lot of what we also do is just being a master connector and being the known go-to guy for certain things. So, all right, cool. Speaking of knowing people, there's a guy, his name is Jim Lay, and he's a family friend from up north in Maryland, and he owns a number of different parcels in the Charlotte County area. And so I've been kind of doing some CMAs on all those lots and figuring out what it's currently worth and this and that, and doing some tracking for him. And we were kind of talking the other day, and he said, based on where this market's at right now, it kind of reminds me of like 2000, when there was like the .com boom, and how the buyers and the sellers mentality around that is very similar. Because when the .com boom happened, it was very, very high tech focused, and we're seeing things with like SVB Bank now, very high tech focused business in Silicon Valley Bank, lending to all the companies there in San Francisco. And now that the attention from all the tech businesses, Meta, people don't want to be wearing headsets and living their life on a couch. They're kind of pulling away from that now. And people are saying, okay, rather than putting this in stocks, what can I put into something that's a hard asset? Real estate. And so you're seeing a lot of that money shift over now out of the markets into real estate that's controllable. You got the tax appreciation, everything kind of factors into it, rather than just simply the cash flow. It's multifaceted. There's a lot you can do with it. And I think it's the preferred method of choice for like the vast majority of self-made millionaires out there. So definitely something to focus on, and that's a reason why and I think you as well, decided this career path. So that's kind of a similarity between then and now. And then kind of talking about now syndications. So you kind of had a question about like the model of syndications.
Yeah, and I would say the overall like concept of syndication, because as I'm making these seller calls, obviously at the same time I'm making buyer calls as well, right? So one of my qualifying questions when I ask these buyers to see if they're like legit, see if they're actually in the field doing deals and not just another guy just trying to like claim some off-market properties, is are you using buyers? So are you syndicating these deals? Like, how are you funding these deals? So some of them, they flat out tell me that they're syndicators themselves. Some of them say they have like a few partners they're dealing with, and they like, if you email me this off-market property, I can let them know about it. And I just wanted to kind of ask, like, what are some benefits, what are some pros and cons that you can like see with a syndication deal, and like the overall concept of what syndication is?
Yeah, so pros and cons of syndication. There's multiple levels of it, and syndication is kind of I'd say like a second tier level, because the first one would just be you and a partner on an LLC, you do a deal. Next level of that is syndication, where you say, okay, well, these are kind of some smaller deals, let's go do a bigger deal, something that you actually need to raise capital for. And then in the private equity scene, there's more general partners, and then there's limited partners. The general partners kind of steer the boat, they make all the decisions, handle the compliance, the maintenance of the fund, which is like the tier 3. And then the limited partners, they put up the funds, and then they are more or less silent partners. But a lot of them might not be full-time real estate folks, so their focus might not be the day-to-day operations of the property. And once you pull together a certain amount of capital, you get economies of scale. So once you get above, loans of $4 or $5 million, you start to get breaks in the interest rates as well. Then you can bring on different types of agency debt, different bridge loan options, things that you can get creative on because you're just dealing simply with more money. These bigger institutions and stuff are able to move more capital more quickly if you're not going to do the whole deal all cash. So anyway, you can leverage on a really big scale with an economies of scale, so you're kind of getting more efficiency, more margin in those deals with your limited partners. Now, the cons can be you have to go out and raise all this money now. So if you need to go raise $10 million to go buy a deal, and you get all these verbal commitments, everybody starts putting in money, and now you're short. Well, now you're short. Yeah. And then you also have limited partners that say, hey man, I'm like getting in a divorce and I gotta, I need some money right now. And you're like, well, I'm sorry, I can't liquidate this investment out of respect to the syndication or the fund as a whole. And so, you don't want to put the fund in danger or anything. There's also SEC compliance with a private equity fund, and some of that to a degree as well with the syndication. But the main difference between a syndication and a private equity fund is that the syndication is on a one-by-one basis. So all of your reporting, all the money goes in and out of one deal, one transaction, one property. Whereas with a private equity fund, you can kind of keep the money in the fund and you can do deal after deal after deal, but syndications are a great way to kind of get into the private equity side of the equation and scale up through there.
So you can even say that, like, for people kind of starting out and investing in multifamily properties, you'd say it's more beneficial to kind of go the syndication route and then eventually like scale up into the private equity.
100%.
Nice.
So yeah, and people out there are getting sponsors. Yeah. And it's basically just finding somebody that you can leverage their experience and be like, collectively, we have over 40 years of experience, and you might have only been doing this for 5 years, but they've been doing it for 35. Like, that's a great resource that you can go to. And you'd say, like, look, we've got a board of advisors that's seen multiple markets, and they themselves are, GPs and X amount of units, or hundreds of thousands of square foot, warehouses, different things like that. And so, kind of leading into our next thing here, talking about funds, Citadel is a hedge fund, one of the largest, most successful hedge funds within the last couple of years. And how much assets under management do they have?
That's 62 billion.
62 billion?
Yeah.
Yeah, that's not too bad.
Yeah, not too bad.
Not too bad. So they are opening an office up in Tampa, actually, as what was published by Tampa Tomorrow over there on Water Street. So that's kind of exciting to have them over here. I know they had relocated to Miami, and now they're coming over here to the West Coast. So that's pretty cool, something going on here in Tampa. And then, man, it's almost April already. And by, I think, April 15th, everybody's personal tax returns have to be in. So
that's a due date.
Yeah, so I still got to do my personal tax returns. I got an extension for business tax returns. It's just been so busy, got a lot going on these days. But yeah, it's really important to keep all of your bookkeeping together. I've noticed. I'm using QuickBooks now, finally. I've been on and off of QuickBooks for like at least 5 or 6 years. And it's helpful, but you kind of got to evolve with it. And if you're not well versed with accounting, it's definitely something that you need to stay on top of. And at least once a month, just go and reconcile all your books. And you can learn. They have a lot of free resources and stuff like that. So that's been really helpful. Have an accountant that has been doing the payroll, and I'm at a point now where I want to pay taxes. In the past 2 years, I haven't wanted to pay any taxes, so my stated income is really low because all of my business overhead expenses, so which are real expenses. I mean, everything from gas, driving a lot, doing a ton of showings, all the software that we pay for, this office, all different kinds of stuff. And so basically at the end of the year, your income on your tax return, you're not paying any income or any tax on that income if it's not above a certain level. And so, this year I want to pay taxes so that you can actually go and get a loan off of that, because they take you the last 2 years of tax returns, combine them together, and then go from there. So
Yeah.
And again, not accountants or anything, so go talk to an accountant. We're not lawyers or anything, so go do your own your own research. So just kind of a reminder for all of you that might need to actually go do your tax returns right now. The other thing that we've been doing more as a push in our business is focusing on going to more events, talking to more people, building some more of those
100%.
relationships. Because I saw something or heard something within the last couple of weeks that just the way it was said really hit home, which was like, what you know and who you know matters, but what you know gets you to a certain point by and large, and then it starts to plateau. And then beyond that, it becomes a little bit more so who you know. And so how do you get to know more people on a little bit more of an intimate level than just simply walking around the workplace, is going to more of these events, and kind of really sharing collaborative ideas, over drinks and hors d'oeuvres and all different kinds of stuff like that. So that's really how you can kind of build some more of those relationships. And face-to-face, word of mouth, in my opinion, is always going to be the strongest form of marketing out there, far above and beyond anything else. So I found that to be true time and time again. And then lastly, kind of messing around with ChatGPT a little bit, and I was asking it some questions.
So it's a lot smarter than I thought it was.
Yeah, it is.
Yeah.
It is. I kind of wasn't expecting it to have some of these responses, but it was funny because like the third question I asked it was something along the lines of like, what is going to be the best asset class in real estate for the next 100 years throughout the state of Florida? And it was funny, the number one thing was multifamily. And I'm like, there we go. All right, that's it, folks. So, if ChatGPT says that's the best asset class in Florida, then,
It must be true.
Sure enough, it must be true, right? So that's what we're going to focus our efforts on. So I think that's a good stopping point for today, and we'll be back next week with another episode. Hopefully y'all are liking the video element, visual element, and the audio as well. So whatever platform works best for you guys. But until next time, thank you.